Hello, Mike Meilinger here. I want to talk to you about one of the services that you might be reaching out to us about, which is an income calculation for divorce purposes. Income calculations are generally used for two purposes in family court. One is to determine how much child support someone should pay, and two is how much income is available for alimony. Generally speaking, your income calculation is going to be for a self-employed or a business owner, and what we're trying to do is look at the economic benefits that you or your spouse receive for the business and put it at the same level as if someone worked for a company and was receiving a W-2. There's a lot of benefits to running the business where you're able to structure your income in such a way where you legally lower your taxable income, and what we have to do is bring it back to what the economic benefit is. The best example of this is depreciation. Accelerated depreciation is a great tax benefit for business owners, whereby a business owner can buy millions of dollars of equipment and get a large upfront deduction. So for example, let's say a business owner, a very profitable business, is making $4 or $5 million a year. He might purchase $3 to $4 million of equipment and write it off the year he purchased it and lowers his taxable income. Now, depreciation for purposes of your income has to be stated on a straight line basis. So what we do, give you a good example, is we just recast the depreciation. Hey, you bought $5 million of equipment, and over 5 years, that would be $1 million of depreciation instead of $5 million of depreciation. And then we calculate depreciation. It's a little more complicated because what you have to do is you have to go back a few years and calculate all the purchases and come up with a straight line depreciation method. But that's a simple way that we calculate income. One thing that's great about income calculations is if we're hired for valuation of a business, we're going to do the income calculation as part of the valuation for the business. Another service is for alimony. In most instances of divorce, alimony is going to be a limiting factor, i.e., generally speaking, it's going to be limited to the income of the working spouse. And the reason it's going to be limited, there's only a certain amount of income that can be paid out economically by the income earning spouse. With that said, we work on a lot of cases where there's lots of income. And then, again, always consult with your attorney. Then the need of alimony becomes something that's really important. So what we're going to do is we're going to look at bank statements, credit cards, and we're going to come up with, over the life expectancy of the marriage or over the last 3 years, some cases 5 years, how much money is needed to maintain the same lifestyle that the non-income producing spouse needs. Again, always discuss this with your attorney. He'll be able to give you better, more concise advice on your case.